Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, traders and investors. Welcome to this Tuesday, March 21st edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we're going to talk about that crazy two-day move in ESPR. Maybe you heard ARCA was down yesterday. We're going to talk about what that meant how that affected Dennis and other traders, if at all. Got a couple earnings today to discuss. CSIQ and General Mills are sticking out to me this morning. Some ratings as well. And after the bell, Nike and FedEx are due to report. We got three guests for you today. Our first will be at 8:15. That's Gary Kaltbaum. He's an investment advisor and the author of GaryK.com. At 8:35, we're going to have Nick Shaheen, as we do every Tuesday. He's our options expert. And then 9 p.m., or a.m., we're going to be joined by Vlad Karpel. He is the founder of TradeSpoon. So, Joel, how are we doing in the S&Ps this morning?
Not too bad. Trading up 4 1/4 here. Just took out yesterday's high by a few ticks, so we'll still be keeping an eye on 76 even on the downside. Let's see what happens if we get back down to the close of 70 1/4. Crude, April crude trading higher by 37 cents at 48.59. Let's take a look at the daily crude chart for some levels here. Trying to get back over 50 here. Stopped a few times shy back last week. Gold and silver in the red here, and I'm just looking at old Apple here. This must be an all-time high we're trading at 141.85, gapping up above yesterday's high. Dennis, did you survive the close yesterday?
Yeah, there was a few hiccups there, because I look at the closing prices when I'm trading after hours, see if something's trading up or down. You have to look adjusted. I'm like, why does my platform not have any of the closing prices? I looked at my other platform. It didn't have any of the closing prices either. And this was mainly on the exchange-traded products that I noticed it the most. I noticed some closes, but then they were saying there was as much as 90% of stocks didn't have a closing price. So anyways, ARCA goes down right. That's a stock exchange, the New York Stock Exchange, ARCA, goes down right at 4 o'clock, and so they don't get the closing prints out there. And the closing print is the last trade of the day. We always say, me and Joel, we look at that opening print and the closing print. Those are significant because there's so much orders. There's so many people who, trade on the close. So you're sitting here waiting for that closing print, and you're looking and you don't have them. And you're like, okay, well, I don't know where anything closed. So then I'm looking at the last trades around like at 359.59, and all these securities to try to gauge, where the, SPY was, where DIA was, where, all the exchange traded products were, because I look at these for indications, especially the SPY, on what's happening after hours. And we know I use SPY, I don't use my futures quotes. So SPY is significant for me when I don't see a closing print on it.
All right, everything backing up and running this morning.
Yeah, it seems to be smooth this morning. So obviously, those were the few hiccups there with that. The media is going to talk a lot about it, but really, the majority, 99% of the people, it's not going to make a big deal. For me, it was a little bit of a deal because, like I said, if I'm trading something after hours, I need to know where it closed to know if the stock is, or the ET, the exchange traded product, is trading up or down. But we got through it. So I don't really love the way they were calculating using the VWAP over the course of the last, I believe, 5 minutes, which doesn't feel like a real close to me. So just be careful. Word of caution to those, traders who are very short term and looking at the closes. Make sure the stock was actually on the closing price. Make sure it is, close to where it was trading at 359.59. Because if you're using VWAP over the course of the last 5 minutes, that closing price could be a few pennies away. It could even be further than that on some different stocks. So just be careful with the closes today, or yesterday's close. If you're using that as an information you're trading, because it could be a little bit out from where it was actually trading at 359.59.
All right. One of the craziest two-day moves I think I've seen in a long time here, Dennis, ESPR. Did you get down and dirty in that one?
No. And stuff like this, I don't trade. And, we know my style of trading. I've been in the business of trading as my sole income for 18 years. And the reason I believe, that I, successfully have made money every year in my 18-year career is that I stay away from stocks like this. I have no idea how to trade something like this. This is what, a trader is always going to be naturally, a newer trader going to be naturally attracted to is big action, and I want to go, oh, this is where the big money is. Get rich fast. But when you're going into stuff like this, there's just so much, it's the price discovery is so wild. Trying to figure out how to digest the move. Here we are, the thing gets killed 2 days ago, goes all the way down almost $20, and then rallies basically 100% one day up to 41.22. I mean, if you're trying to trade something like this technically, and you're looking at this, technicals take a complete backseat when you're in price discovery mode. And when there's fundamental information that's going to drive the price to a different, there's a lot of traders trying to figure out what that thing's worth. And when a stock trades in a range of 10 points, it's telling you the market doesn't even know what the thing's worth. So it's just basically, for me, it's too much like gambling when you're trading stuff like that. If you're good at trading this type of stuff, by all means continue to trade it. So I'm not going to deter you from something if you're really good at trading this type of stuff. This has never been my bread and butter. This has never been my cup of tea to try to trade stocks like this. This is the exact opposite of boring. I like boring. I like consistency. I don't like to see wild swings in my P&L. I like to see slow, steady climbing P&L. ESPR is a wild child. I'm not even going to, try to guess how to trade something like this.
Well, we can give you one strategy, Dennis, and one strategy only. Okay, this stock ended the day where at 41.22. And I know you're gonna get this right. The opening print was 32.10. That was up from the 23.67 close. What do you think the low of the day was?
That was the low of the day.
Low of the day. Low of
And,
the day. So if let's say you shorted it, you're thinking, because I said, oh, maybe this thing can get over 30. I'll tell you, if I would have shorted that thing at 32.10, the first couple prints, I would have been, whatever I could have done to get out of that stock. Probably not gotten long, but once again, using that opening print is an indication. I
yeah.
mean, you were dead meat, and it never came back down below it.
And that's why we talk about the opening print so much, and so many of my strategies revolve around the opening print because, let's say, I do a lot of, opening trades, and I may get 10 positions long, 10 positions short. Well, you used to always say, it seems like about 25% of the time a stock will open at or near, very near its low of the day or its high of the day. So if you can actually be long those stocks that are opening at the low of the day and short the stocks that are opening at the high of the day, you're going to make money on those stocks. You're almost guaranteed to make money on those stocks if you short it at the high of the day. So the whole thing I do is, when I get filled on 5 or 7 or 10 or even 20 positions, I immediately go to all the losers and cover all the losers because I'm trying to actually get short near the high of the day or long near the low of the day. That's kind of the whole strategy behind it. So, if I get out of the loser ones quick, maybe the ones that I'm stuck in are actually going to be those ones that I'm going to be long at the low of the day or short at the high of the day. And then I can, run with those a little bit wild. Like, I always say the winners look after themselves. I actually heard Kramer say that last night too. Not sure if he's listening to the show now because that's something I've said on the show here for a long time. When you get a whole pile of positions, I manage out of the losers and I kind of let the winners look after themselves. So, that's, the way I work. And it all revolves around that, something that you taught me back in 1999, Joel, that, a lot of times a stock will open at its high or low of the day.
All right, let's get to some news here at 8:09.
Just a quick question before we jump into the news. Dr. J asking a question. What's the difference between ARCA and NYSE? So NYSE is your listing primary exchange. They don't have an after hours. That's intraday. It's a different exchange. ARCA is owned by the NYSE. So actually the NYSE owns 3 different exchanges. So they own NYSE, the ARCA, and the Amex. So, if you look, NYSE ARCA is their electronic exchange where everything's happening electronically. And, it's just a different exchange that you can route to. During the day, you'll see NYSE and you'll see ARCA. You see 2 separate quotes. In the pre-market and after hours, NYSE stocks only trade on ARCA. They don't trade on the NYSE in the pre-market. They don't trade on the NYSE after hours. If you look at a stock like General Electric right now, the best market is on ARCA. It's bid at 29.78 on ARCA. There's no NYSE market because the NYSE doesn't open until 9:30 and the NYSE closes at 4 o'clock. But ARCA opens at 4 a.m. and closes at 8 p.m. So you've actually got an extra 5.5 hours of ARCA trading in the morning, and you've got an extra 4 hours of ARCA trading after hours there. So that's the quick explanation of what's the difference. So they're separate exchanges with different hours.
Owned by the same group.
Owned by the NYSE, yeah.
Okay.
Joel, did I lose you?
No, no. I was just I was waiting for you to go into your next
Oh,
movie
you want
there.
me to go? Okay, so you want to jump into the news stocks of the day. So we got 5 minutes before our first guest here. Let's jump over and do a couple of the earnings plays here. Let's jump to the food stocks because they're going to be moving around here a lot today. With General Mills, which just reported, but last night, this is a little bit of gutsy move. Bernstein came in and downgraded all the food stocks. So they're downgrading ahead of an earnings report, which is rare to see. But they downgraded Kellogg's, Conagra, CHE, they downgraded Campbell's Soup, they downgraded GIS, which is the one that just reported earnings, and they downgraded Smuckers, which is SJM. They downgraded them all to underperform, which is somewhat significant. So they all got hit last night. Now we get the earnings report for GIS. Spencer, this is your cue. What did GIS have to say this morning?
72 cents versus 71 cents for the third quarter. Sales of $3.78 billion versus 3.82, so they missed slightly on the sales number. They did reiterate their fiscal year 17 guidance, however, so.
And we've got GIS trading down fairly significantly in the pre-market. I mean, this has been a consolidation station for a month here between 60 and 61. Now we break down through the 60. Again, it's early here. You know, you've got to look at volumes. You've got to look at how much is trading. We've already bounced back quite a bit here from the lows. Joel, I saw this thing down an extra handle here earlier. So we're already on the comeback trail. How low did GIS get?
58.10 your pre-market low. Bounce back into the 59 handle. But you know what, Dennis? I'm going to use a longer-term chart on this one. You mentioned consolidation. Look at this. Going to the monthlies here. This is bad. This is bad for General Mills. You've been trading between 60 and 64 here. One blip under 60 here. That was last month. But this is not a good-looking chart. I'm watching $60 not only today, but over the next, this was a big number for 1, 2, 3, 4, 5 months. Now you're trading below it. I'm going with Bernstein on this call. GIS looks in trouble long term.
Quickly, just the other ones because you're getting downgraded Kellogg's, you're getting a downgrade at Conagra, you're getting a downgrade for SJM, and you're also getting a downgrade at Campbell's Soup. All of these stocks have been in consolidation station. All of these stocks are trading down, or at least they were trading down last night after hours, and some of them are still trading down here in the pre-market with the downgrades and probably the double whammy because the bad news from GIS too on the disappointing earnings here. Quick technical thoughts on any of these, Joel, that you wanted to jump into?
I'll just go to the Battle Creek, Michigan company, Kellogg. That's my favorite food stock here. Not a pretty looking chart here long term. Remember when it had that crazy run, Dennis, up to 87.16? Now
Wow,
falling
yeah.
back here, I'd keep an eye just like 73.70 area. That is a long term support level. The only thing here, and I haven't looked in the note or done the details here, people are still going to be eating food. Amazon is not making new food yet, so I'm not sure what the I'm not sure what the fundamental reason is behind this. But I tell you, this daily chart doesn't look good here in Kellogg's. I'm keeping an eye on the cluster of lows around 74, but let's just call 74 your long-term number to look at in Kellogg's.
A lot of confusion out here today. David B saying Deutsche Bank trading down 5%. I come in here. I have one platform that says it's trading up, one platform that says it's trading down. It does appear to be trading down 5%. It's actually not trading down, though, this morning because there was a rights offering and is trading X rights here this morning. The new rights is DB.RT. So that is what the new symbol is for if you held Deutsche Bank overnight, you get those rights here this morning, and you have to adjust the price of your stock for those rights. I'm hearing multiple adjustments, so I'm hearing that it's 16.40 the adjusted price, which would actually put Deutsche Bank up a buck. But then I'm hearing other people say that the offering price, that the adjusted price is different. So I have different platforms, different prices. So I'm not going to tell you exactly what the offering price is because I'm still trying to figure out exactly what it is. But I can tell you this morning that Deutsche Bank is actually trading in the green here this morning because it is trading X right. So that's confusing. Barclays is trading up. You've got a lot of the European banks actually trading up here this morning. So I know I like to use my Deutsche Bank indicator. If you're coming in this morning, you see it down a buck, you're probably thinking, why is all the U.S. financials trading up? Why are the other European trading up? Well, Deutsche Bank is actually trading higher here because it is trading X rights.
If you're confused, I'm more confused on that
It's
one.
confusing when they do the rights offerings and it's X rights because sometimes the rights will trade before when is the actual X rights day, and a rights is just basically the right to buy the stock at the subscription price, which is usually set quite a bit lower there. So I'm not sure. I didn't go and jump into details on what the subscription price was. I didn't read the prospectus that they sent out here on these things. So just telling you this morning here that Deutsche Bank isn't getting killed. It's actually trading in the green.
All right, Spencer, what do we got coming up here at
We
8:15?
got Gary Kaltbaum. You may have seen him on Fox Business, on Fox News over the years. He runs Kaltbaum Capital Management and GaryK.com. We'll be right back with Gary.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm Joel Elcon, along with Dennis Dick and
Grace Cobham Capital Management.
And we are on the line here. We are not on the line trying to locate Gary K. So we're going to go back and cover some stocks.
We got two more earnings stocks here of note here to cover. Spencer's going to try to find Gary K here in the background while we cover Canadian solar earnings. CSIQ trading down 8% here in the pre-market. I tell you from the trusty Benzinga Pro, they made 24 cents against analyst estimates of 32 cents, so that is a miss on the bottom line. Sales came in light as well, 668 million versus 690 million, and that is why the stock is trading down a buck here in the pre-market. Light volume so far. We've only traded 5,400 shares, so it's still early here, but it was an ugly report and it's some ugly early trade.
All right, let's take a look at the price action. As you can see, trading 6 cents off the pre-market low of 12.40. Got that one little daily low at 1247, giving you a glimmer of hope. If not, let's see if we can see that February 10th low of 1202.
Then you have Lennar, the home builder, also reported earnings here this morning at 56 cents on sales of $2.34 billion. That stock's trading, it actually traded up initially here quite a bit. We were trading up here, I saw as high as 53.90, and now we've given it all back. So here it is, the fade trade back in a little bit in the LEN. It's trading down here in the pre-market now. It ticked down to $52. It's back here right around settlement, 52.67, so a lot of wild oscillations here for LEN, Joel. Technically speaking, what are you thinking?
Lennar 53.90. That was your major print ahead of 54. Right back down to 52 even. Nice $2 range there. Boy, that took out the former high of the move. Former high of the move was 53.79, but you got a good sell off if you were looking at that. Still up a penny, so I'll let them battle it out here at unchanged at 52.68. The $52 level looks like decent support to me. Your yesterday's low, 52.15. Your 3-day low, 51.88. So 52, and then your pre-market high, 53.90.
Jumping over to the ratings parade, we already told you about all the food stocks that were downgraded to underperform at Bernstein, but there was some other significant ratings changes here this morning too. Facebook, let's jump into that one here. Getting upgraded this morning at BTIG Research. Facebook upgraded to, just grabbing the rating.
It's buy. It's a neutral.
It's a buy.
It's from a neutral to a buy. So here's what Rich Greenfield, who's the analyst, here's what he said last July when he downgraded Facebook from buy to neutral. He said expectations were just too high, investors were just too aggressive. He liked the stock, but at that point they had crushed earnings 2 quarters in a row, and he just didn't see that continuing to align with expectations. So that was July. He reversed that this morning, upgraded the stock from neutral to a buy. He's back on the Facebook buy train. He also gave a price target. I want to say, what was it? It was 170. Where was it? I think it was $170. But I have to confirm that.
Wow.
Joel, what do you think here? In July, the stock was trading around $110, so now he just left 30 points on the table. Now he comes and upgrades it here. I mean, technically, this thing has just been moving higher, and it looks like, it might be in breakout mode here again. This upgrade probably going to help it, maybe to break out to new all-time highs. But give us your thoughts here.
Well, do you want my technical thoughts, or do you want my thoughts on
all of it? I want all of your thoughts.
Well, if I bought it when he downgraded it, and then logically I'd be selling when he upgraded it. So that
you're going to do the fade.
That would be the fade. But from a technical perspective, 141.19. That's your pre-market high. That's the highest the stock's ever traded. If I was waiting to buy it on a pullback, I would wait till it came back down to the 140 area. 4 highs between 140.10 and 140.34. So old resistance right now, but now it's new support after the upgrade.
Then you got Carnival Cruise Lines here getting upgraded at William Blair this morning. It is upgraded. Spencer, do you have that one in front of you? Because I didn't write it down. I know they upgraded it.
CCL?
Going for market performed, outperform.
Is the CCL?
Yeah, market performed, outperform I have.
Yep.
So, and it's trading up here in the pre-market about 1%. CCL 58.25. It's 58.35 was just trading at earlier here. This one's been coming back too. I mean, there's so many stocks that were hated, and I'm telling you, hated at the beginning of 2016. This stock got down to $40 right at the beginning of 2016. Wow. So, in basically 1 year here, we are up at 60. So you're talking about a 50% move in CCL.
Coming back towards the all-time high. All-time high is 58.48. So if you've been waiting since January of 2005 to get out at 58.48, you may have your shot today.
I got Gary, so we're going to give him a call right on the hopper right now. We're just going to keep him on. We're going to stay on, and we're going to give Gary Cartbaum a call. Again, Cartbaum, Capital Advisors, GaryK.com. You may have seen him on Fox Business, on Fox News. At least I think this is the right number for him. So we're gonna find out. Gary, are you there? This is Spencer from Benzinga.
Yeah.
How's it going this morning?
Good. What's doing?
Not much. We are live with Joel and Dennis, and we have your note in front of us. Sorry for the little mix-up there, but we want to get you right on talking about. First, let's get your reaction to the Fed last week. What did you think of that and their expectations for future rate hikes?
Well, I think the good news is that I think the Fed matters much less than they did for 8 years. I think there's a lot more that's going on, and if you notice, the Fed doesn't talk as much. And just also keep in mind that the rest of the world, we're still at 1% or less here, and the rest of the world is sitting around negative rates and as well as printing trillions of dollars. So I don't think it matters much, and I think the world just stays easy money policy here.
What's this mean for the financials going forward? Because the financials have been on an incredible run since Trump got elected. Obviously, some of that might be to do with the hope of deregulation in the financial sector, but it also has the hope of a little bit higher interest rates. What do you think for the banks here going forward, Gary? Because they didn't really respond great to last week's interest rate hike.
Well, all I can tell you right now, they're acting, I don't know if the word suspect, because after a big run, it's okay to pull back. But right now, I would not commit any new, monies to them at this juncture. I think you got to realize Bank of America went up like almost 45, 50%. That's like 3 or 4 years of moves. So I think you got to be a little bit more careful here, no matter what interest rates do now. And look, it's just a matter of how big of a move they've had. It has really nothing to do with anything bad. It's just sometimes gravity does take over after such moonshots and companies that really aren't growing in a big way.
And just kind of the drift after the Fed meeting and both the TLT and the 30-year bond, just kind of a little bit of a rally going on here. Things like looking like still 2 or 3 rate hikes on the deck for this year, but just a little bit of relief pop here in the bonds and the TLT before we see continued downside.
Well, look, the good news is that with all the noise going on, the 10-year sitting at less than 2.5%. And I got news for you. When interest rates stay low, it's not a bad thing. I know you hear from a lot of people, well, interest rates are too low, that's bad. No, that means the cost of capital is down and it's much easier to do business. I think probably somewhere in here, we've seen a low in the bond market, but I'm not sure it's the low. When you go look at the TLT, that is pretty bearish. You're in a little bit of a rally mode, but that's after, getting whacked. So I wouldn't be bullish on bonds at this juncture. But overall, the good news is that I don't think the end of the world's at hand because interest rates backed up a little bit.
Gary, we haven't had a 2% correction, you noted here this morning, since the election.
Yeah.
And
that's amazing.
That is unbelievable. I mean, I can't remember. It seems like every time we pull back 0.5%, there's money managers are just scrambling. And it's almost like in the last little while, and I've said this, over the course of the last 7 years, but, obviously 2%, and now we're getting to an extreme level. It just seems like there's so much underneath demand. Every time we pull back a little bit, whoever is underinvested is grabbing stocks and buying because they know they're going to come back the next day, or at least on the indices overall. I know there's been some individual sectors. What do you think this, happens, once we start to actually, the ball starts going the other direction, though?
Well, first off, number one, welcome to a bull market. When they can't sell them, off, that is what a bull markets are made of. We've gone up, we've sat, we've gone up, we've sat. Now you're in the midst of about 3 weeks of sitting, and there's nothing wrong with that. The amazing thing is they just, I know there's a few areas in trouble. I've been mentioning them, like the energy. Retail is still in a bear market. The large caps are better than small caps. But overall, they just cannot pull this thing down in any way, shape, or form. That leads me to the worry. When you get everybody used to thinking, oh, this is it, we're never going to correct, everything's great, and then all of a sudden we finally get one, it unwinds what I call a little bit of a one-sided trade as everybody's all comfy and thinking nothing ever bad could happen. So just be on your guard. I could tell you that if the S&P breaks out again, great. If it breaks the 50-day, bad. I mean, this is the easy way of looking at it. But right now, again, the market refuses to budge on the downside, refuses to give back anything, and I would just suggest you ride it out until the market says otherwise. And again, I'm amazed. I don't think I've really ever seen 4 or 5 months of action like this where it just refuses to, usually you get some scare days or a scare week. We haven't even had one of those. So, again, until otherwise notified, you got to go along with it, and all pullbacks have been viable. The semiconductors are just en fuego. And again, you watch the financials and semis, they'll tell you everything that you need to know because they've been leading pretty much all the way.
We're on the line with Gary Kaltbaum. He's an investment advisor and author of GaryK.com. Gary, when you're talking about interest rates and the markets, of course, you got to turn to the housing market. Rates going up, even though I think they're incremental. Rates are still low for housing. Looking this Spider Home Builders ETF here, 37.75. We hit that a few days ago. Same as the market here, and just bide your time or continued upside for the home builders.
Well, we're bullish on the home builders. Very good action over the last 3-4 weeks. They're extended here. Pullbacks are better to be looked at. Don't know if you get them, but just strong. Again, we've had differing sectors emerging. We had the biotechs emerge. They got hit because of Amgen last week, but I think they'll probably come on again. Now you got the home builders. On the other end of the spectrum, I would just continue to avoid, except for bounces in the energy complex, a lot of the commodity names. So it's a lot of very selective things going on here, but we really do like the home builders here on any pullbacks. But you got some earnings coming out any day. I think Lennar maybe, I don't know if they reported today or not.
Yeah, they did.
But pardon?
Yeah, they did. They reported here this morning.
Okay.
Stocks traded flat.
Yeah, well, look, we think any pullback's good. And the one name that really reacted well to the earnings was Toll Brothers, gapped up at 34. It's now 36.5. If it pulls back into moving averages, I think they're viable.
Well, the biotech sector here, obviously we had Amgen, Regeneron really got the beats there on Friday. But when you're looking here overall, biotechs have actually shown quite a bit of strength here over the course of 2017. I mean, after just looking at the IBB, we started the year down around 266. We're up here at now 296, and it was one of the sectors that did not perform well in 2016, but it's been okay in 2017.
Yeah, well, it had its big bull market before everybody else, and it's just going through a big, giant consolidation. I think last week, biotechs are ready to break out above that 301 to 303 area on the IBB, which you mentioned, and then the Amgen news hit them down. I think you still stay on top of them. Best-looking names, and I don't really like commenting on the names that have no sales, but the best-looking names that have good sales and stuff. You look at Celgene, really good action here. Amgen was pretty damn good until that day. But I'd be watching Amgen if it can hold the 50-day moving average here. You now have, a kind of sort of specialty drugs, Jazz Pharmaceuticals, JAZZ, big volume yesterday, comes out of range. So there's plenty there. And if the IBB ever gets above that range of the last 3 weeks, you got another leg up and probably a decent leg up, and I'd be definitely on top of them.
Before we let you go, I just want to ask you about the transports here. A lot of times people call the transport as a leading indicator for the market. Little breakdown in the airlines here. Give us your take on the transports.
We are not bullish on the transports. Anything trades below moving averages. It just doesn't have to be in focus for us. We just stay away. And it's not just the airlines, but you got something like a J.B. Hunt. In the truckers, these are short-term basis breakdowns. They're not big bear market breakdowns, but I just avoid them. I think any bounce is sellable right now. Of course, that can change, but I would just not go near the transports. And I mentioned on my radio show yesterday, it's kind of weird that oil prices keep coming down and transports go down with it. So I don't know what's at work there. People are saying, well, maybe the economy's not as good. I'm just not going to wonder about it that much and just say I'm avoiding the group right now. And, of course, you mentioned the airlines, not very good action at all. The strongest name, like a Southwest, that's if they turn back up, take a look at Southwest. It's the strongest name just under the 50-day. But most of them look like caca right now, and I wouldn't be touching them.
We've been on the line with Gary Kaltbaum, owner and president of Kaltbaum Capital. Thanks, Gary. We'll talk to you again soon.
Pleasure, sir. Thank you.
All right, 8:35 here. Dennis, you want to get a quick comment in? Maybe bring Nick in on the fly. What do you
Yeah,
want?
let's bring Nick in here on the fly. And obviously, this has just been a market where I've said it multiple times. It just doesn't correct. And
It
we've been
doesn't
talking.
correct.
Nick, let's just continue this conversation here. I mean, this is a frustrating market as a trader, and we had this actual article here, just tying in from this morning in the Wall Street Journal saying high frequency traders, have been under pressure here because their expenses are going up and volatility is going down, and it's kind of like the perfect storm. And I do agree with that article. And for the most part, we're short-term traders. We're doing a lot of strategies that are similar to maybe what some high frequency traders strategies do. And I tell you, it is difficult, in a low volatility environment for people or for smaller market makers and high frequency traders to make money. So it's this market is frustrating for me as a trader, Nick. I'd like to see a few more corrections. I'd like to see a few more 100-point up, 100-point down days. When are we going to have that happen?
It's pretty frustrating, like you said. But what works is range trading. So if you sell like an iron condor, or if you find specific names that are going to move on for a reason, and you guys touched a little bit on this. So what's working is that Joel and I have been going back and forth. Like, for example, Ford had a beautiful setup for a breakout. It was so frustrating trying to buy calls and wait for it to break out. But there are other names that are just doing their thing. You guys talked about Facebook earlier. I don't need an expert to tell me that's going to go up over the long term. So you have to pick your entry points well if you're just buying stocks. Otherwise, if you use the options market, there are ways to make it work. For example, when oil fell, I sold puts in the USO, and they're green now to the tune, I don't know. I can close them now for a nice profit. But I don't have a reason to, because I know the bottom is not going to fall from under there. OPEC came out and immediately defended it. So you got to pick your entry points and in what and how. So buying stocks and holding is a little frustrating because there's meander type of thing going on. We have some hesitation on the bulls part, but they will run with a catalyst. And on the selling part, your previous guest talked about, we haven't seen any scare days. What we did, only when you look up at the scoreboard, it's minus 0.2%. So it feels like, oh my gosh, this is the end of the world, and the bears start buying puts, or anybody who's long starts buying puts to protect themselves. But then you look at the scoreboard and nothing's going on. So it's a weird situation, kind of like nobody's scared of anything. Nobody can see a terrible downside in anything, and everything is catchable. So it is very strange. So in that scenario, it's time to sell some risk on the upside and downside, trying to range trade something. Like yesterday, I sold some calls in the RUT, but then I sold some credit put spreads in the IWM. Both of these are small caps, trying to balance them out because I don't dare short anything. What am I, crazy? But then on the other end, I don't want to be all long when I don't want to be one-sided in my trade, so I sold some long behind some support lines that I think will hold up.
Nick, I just want to ask you about that crude trade, because that was like a pretty decisive move, very sharp move. Now you waited. I mean, was it some of the fundamentals that you were seeing that made you to hop in there? I was looking for it to come back a little bit lower, to the pre-OPEC levels under 46, but you were pretty decisive there. Was it just the rhetoric and the financial, or in the talk, the fundamentals, or do you see something you like in the charts?
Well, to me, it was easy because I don't use a surgical knife when I sell puts. I use a blunt instrument. So I sold June $9 on the USO. It's not a big risk to take. I collect 30 cents in premium. It doesn't sound like a lot, but I can scalp a nice profit off of it, and I don't even have to look at it. I did not look at it once since I sold it. What I do know about crude is that at a high price, the West, the shale, they're killing the market share of, the profitability of, but actually the market share of OPEC and the nations that are cheaper producers. Well, that doesn't work for them. They just went through a whole war where they brought it down to the 30s, and they took a lot of the heat for it, and some damage in their socioeconomical structure there. And they're not going to do it again. And because the day it fell, they got caught cheating, Saudi Arabia. So the day it fell, they came out and defended it with rhetoric. So I knew that, okay, 50-55 proved too high, so they're going to tone it down, maybe 47, 51, the old range where we were stuck under 50 for a while with a couple of folks above, as opposed to 50, 55 being the range. So I was asleep, not even watching crude for as long as it was above 50. And I said, wake me up when it breaks 50 or 55. And it broke 50. And then, okay, I'm interested now. What can I do? And, on that one bad move, I was like, I'm selling puts. They're defending it with rhetoric. The minute they came out defending it 2-3 times in one day, I was like, that's it. They want a bottom on it. They're not bringing it down back to 30. So boom, sold the puts and never looked back.
Let's jump into some individual stocks here, Nick. We know you'll have the charts in your back pocket here. Downward Dog in the chat wants to know about JCI, Johnson Controls.
Not a stock I watch, but looking at it, stuck in a range for a while with a lot of move ups and down, right? So if you look at around the 42.50 area to 42.80 is going to be pretty interesting. If they break above 42.80 and change, they could see some upside move from there just on a technical basis. But you have to pick your entry points like we were talking. So pick your direction, pick your timing. I don't know if they report anything. I don't know what they're doing pre-market. So, it's a know what you're doing and know when to enter. And if you're not sure, nibble. So if you want to do 10 contracts or 20 contracts, take half in one way or another. Plus, there are other ways of going short or long by using longer dated options. So if I know something about JCI that 38 is solid, it's not going to be breached, I'll sell puts in it out in time, knowing that I could own it at 38. And then use the money to finance my shorter term play. So if I think it's going to fall, I'll buy puts in the shorter term and trying to scalp something out of it. If I want to go long it, like Facebook, the easiest play would be to sell longer dated puts and buy calls. This way I can be long Facebook for free almost.
Okay, the chat's starting to give some more symbols, and I've got a couple for you as well. So we're going to put you on the clock here, Nick.
Go.
30 seconds of stock. Starting with Fuzzy, DDR. He wants to know about stock's been a little bit weak here as of late. DDR.
Whoa, I don't see a reason to catch it here. It's where's the bottom? I don't know. I'm going back 5, 6, 7 years. Okay, so I there's no way, nothing I can say on it here except I would not catch a falling knife like this, not knowing anything about it.
What about Chipotle? It's a little bit of a falling knife as well. CMG, the stock, every time it gets up into the 430s, it seems to fail. Every time it starts to get down to the 380s, it seems to find buyers here looking long term. What are your thoughts here, CMG?
So zoom out with CMG. They're still trying to recover. The experts on TV would tell you they have a formula as to exactly when it's going to snap out and overcome its woes with regards to comps. Just trade the range. Selling iron condors on this guy work. Selling credit put spreads on this guy work. The easy way to do it, step out in time, 5-6 months, sell them way lower, give yourself plus or minus 20-30% buffer. You can still yield 10 to 15% on money risk. That's the only way I would trade this guy.
The opposite of the falling knife is the rocket ship, and SHOP. Shopify has been a rocket ship. This stock started the year down at $43. It's now $68 here.
Yeah.
Nick, I don't know how to analyze this. How do you do this one?
This is TH, too hot to short and too high to chase. Wow. Too bad I missed it, and there's no way I can chase it here. I mean, I know nothing about it, but it seems like you can plug your nose and buy some calls in it, and hopefully it continues.
All right. Also, this chat is hopping here. We have Nike here, and what do we got? Nike after the close today. What I noticed in Nike yesterday, and I don't know if we talked about it on the show, it had just a couple little tops there at 58. It cleared that yesterday with ease here. 60, a big level. Nick, what are you looking at in Nike?
Well, this is an area where it's kind of a cup and handle area, and I can't draw a straight line, but where it is right now, 59 to just say just under 60 or so, is an kind of a neckline for a recovery from a couple of dips, one of which is a lot shallower, the more recent shallower. Let me show you. And so it might have some upside if they can emphatically break through. And it seems like and I hear experts and read experts about it, that they're all bullish Nike again. Well, it's it's not Amazon because stuff like Nike and Lululemon, they produce some stuff that's proprietary to them. So if people like their stuff, they're going to buy it. So if retail is buying it, it's just a matter of where they're buying it from. So I wouldn't short it like a retailer. So if it has some upside, I wouldn't try to short it. Oh, it's a retailer, I'm going to short it. It's not like it's Macy's or anything like that. So yeah, I don't mind that. Now I'm going to issue a challenge to you and your listeners. You know, I don't know if Walmart has a deal with McDonald's with their in-store restaurants, and I don't know how big of a sales chunk it is to McDonald's, but there is a Walmart where the McDonald's is going out and something like a Burger King is coming in. So I know they had a deal with McDonald's. So if anybody knows about the details of that, hit me up because we can structure a trade around that.
Okay, all right, and let's see here. ABVV, going back a little bit, I guess pharma, biotech here. I guess more pharma than biotech. ABBV looks like it's trying to gather some momentum here and break out above, 66, 67. What's your thoughts on ABBV?
I think the breakout already happened from when they broke the lower high trend around 64 and change. Technically, I mean, I don't have a reason to short it except that it's towards a level where it has seen some challenges before. If it trades with biotech in general, then I would have to look at biotech in general and see whether it's a good time to get in or not. Your previous guest mentioned 300, 301 on biotech. You know, if I look at the IBB, I'd wait to see what the IBB is doing here, unless I know something about AbbVie. In particular, I think XBI is another one, so I'm not sure which one is a better representation for AbbVie. So I would do some homework there before I jump in long in AbbVie at this point. Plus, there's an open gap, if I see correctly here, somewhere probably like 10 days ago or something like that.
B. Morris wants to know about Pepsi, PEP. The stock is sitting right just under here, all-time highs. 111.15 is where it closed at. Thoughts on Pepsi?
You know, for Pepsi, I'm not going to chase it at all-time highs. If I'm not in it, I definitely missed it. So there might be some better entry points, I would say, in Pepsi. No reason to short it, on the other hand, except for the fact that it's at all-time highs, with market at all-time highs, with not having minus a 1% day in a whole lot of time. But that has been the thesis for a while, and that hasn't worked for bears. So, like I said, it's one of those where I can't get in at this point. Maybe snipe a better entry point.
And I've got one for you here, Nick. Apple, and we know this is one you look at every day. This stock was on my radar here. It broke out to new highs yesterday. It's breaking out here again today. I'm not sure if it's this Facebook, it's a catalyst here, or what the catalyst is, but Apple's trading up through the 142 handle here now. Stock keeps on marching.
Yeah, well, let me reset my chart here. Let's see, Apple. Okay, so Apple, it was already in the middle of a breakout, and that was when it broke out a while back to, not a while back, yeah, well, 2.6, early February. So I'm going to hit you with a weekly so we can iron out the details. And here's Apple. Technically is in the breakout mode, and it's in favor with all the experts. There's no reason to short it other than the fact, that it's at all-time highs, and eventually somebody will sell the news, so to speak. And so if I want to short it, I would just buy some debit put spreads at the money. This way, with time on the clock, like in May. Or if you want to go long it, use longer dated and make it some sort of an earnings play as well. If you do, I do lottos on Apple for earnings, so I usually pick a direction and buy that. So if I do it early enough, then I can get out of it before the earnings hit. So if you think Apple's going higher, then the debit call spread near the money out in time would do you best, and vice versa. So why a debit call spread or a debit put spread, and why near the money? Because then you have a chance to double your money, but you also have time to change your mind. So if you have one bad day and say, you know what, the setup I was too late or something, you can just change your mind and sell it right back for partial gains or losses.
All right, one more for you, Nick, here. The price action in the financials here since the Fed announcement last week. You kind of thought that Bank America, some of these other issues would, break out to new highs on that. They haven't. Give us the implications here of the price action in the financials, let's say Bank of America, since the announcement last week.
Well, I already did Goldman Sachs, so I'll throw this one in there for free. I won't charge you for that. Well, the reaction for the financials and the bond market, like your previous guest, you guys were talking about, was strange on a week where Fed hiked rates. So my interpretation is that okay, they were expecting the traders were expecting a much worse, much more hawkish outcome. So they priced in for once, rarely do that, overprice something ahead of time, and the reaction was the exact opposite. So um, again, the financials, I don't want to short the strongest mover for the last while, but I did dabble in some puts in Goldman Sachs yesterday. They were somewhat green yesterday, so they probably be. I didn't look what it's doing this morning, but it'll probably be back to flat or under pressure. And if so, and if it doesn't work for me, I'll just get out of it. It wasn't like a conviction sell or anything. It was just trying to time their dip. And if it doesn't come, I'm out. Because these guys have been champions. And I think both extremes were wrong. Pricing them down so low for so long was wrong. Spiking them so high so fast is probably end up going to be wrong. So somewhere in the middle lies the truth. But until it comes, I'm just not going to pick a big fight with them.
All right, I said one more, but I was joking. NVDA, NVIDIA.
Yeah, Beast. I've shorted it a few times and won, which was pretty incredible. And it's like playing Russian roulette. I don't want to do it again. Well, here's my thought on all of these tech guys. Our world is becoming much more digital. Everything is becoming more digital, from self-driving cars. I mean, like, we're stepping into these concepts that have been hanging around for a long time. And there are only a handful of companies that provide brains for all of these machines that are going to be running our lives. And I think there's room for all of them to prosper. So just like the banks, if they were mispriced for a long time, they might take a long time to right price. So I wouldn't short them. If you want to take a poke or two on shorting them here and there, that's fine. Instead, I would snipe entry points. So I wouldn't chase it after 5, 6, 7 days of up. But if it gets beaten down here and there and I wanted to go along it somehow, same strategies will work, like selling longer dated put spreads in order to get some money to finance a shorter dated play. That's the way I would do these guys.
All right, we've been online with Nick Shaheen. He's the author of Create Income with Option Spread. Joins us every Tuesday at 8:35, 5:35 his time. So, Nick, thanks for getting up early and joining us. We'll talk to you again next week.
Can't wait, guys. Thank you.
All right, not much moving in the S&P 500 futures since we started the broadcast. Hanging out here just near the highs of the session, currently trading up 4 1/4 at 74.50. Up ahead, we have Monday's high at 76 even, as well as your pre-market high at 76.75.
But a little bit of a sleepy market here. I'll just give you a quick imbalance look here. It's fairly early yet, but 8:53. Bank of America 156,000 to sell. It's notable because it's trading higher here on the day, and a lot of your financials are trading higher. So that's one that I kind of lick my chops. If that thing was to open near flat or just up a little bit, I might actually be interested in buying that stock. Pfizer 83,000 to buy. That's moving up. AT&T 55,000 to buy. Verizon 30,000 to buy. So a little bit of strength in a couple of those stocks, at least this morning. Alibaba, which has been on a tear here as of late, continued its tear yesterday. It's got another 46,000 shares to buy, so it looks like it's going to continue its tear here, at least at the open. Nike, the only one other notable, is 59,000 to sell, and that's obviously ahead of tonight's earnings report.
All right, and Nick just popped in a chart here of AMD, so we'll just put that in there. I think B. Morris was asking about it, so we'll just pop that in there real quick. Both AMD and NVIDIA had strong days yesterday. Nick, see that trend line that it broke there. Coming up on another whole number, NVIDIA bouncing around along with AMD.
We should have the NVIDIA count for you, Joel. How many times you say NVIDIA?
What did I say? Did I say?
You're saying NVIDIA again. You go right back.
N. I did it the first time.
You missed your window period for that. You're going to say NVIDIA for the rest of your life now. NVIDIA or NVIDIA, not NVIDIA?
Let's call it Vidia.
Video. That's what you should start doing. Just calling it video.
I'll just give you some highs.
We'll do like a little jar that you got to record every time you say Nvidia, Joel. You owe 50 cents already to the jar.
Oh my gosh, that'd be
I just said it 3 times though, just explaining what you said. So I guess I owe 75.
1468 and 78. I see a couple highs there, as well as your March 1st high at 1509.
Jumping over here, just want to talk to retailers a little bit. Obviously, we're going to get Nike's earnings here tonight, but man, they started getting whacked there again yesterday. I mean, in this bull market, there has been nothing more bearish than the big box stores. Macy's broke down yesterday through the 30 support level that we had been talking about for the better part of a month, 29.37 where it closed. Nordstrom broke down yesterday. It's hanging on support. Look at this setup, Joel, JWN. All those lows back in February around 42.40. Well, yesterday's low 42.45, so it's right back there near those lows as well. Kohl's hanging here too on a cliff. Got down to 38.47 back in January. It took that out yesterday slightly, 38.22. Man, these big box stores not looking good again.
And they're all just hanging. I see this $38 level. Never recovered from that big gap down, I believe, on earnings. We do have a retailer that's moving up. Spencer, you got something on Kate Spade?
This is just a tweet from Deal Reporter, or a reporter at Deal Reporter, who said that the Kate Spade sale is inching towards the finish line. So there's a story coming up, or already up this morning on that. And that, again, that's not new news, but an update there. And you do see the stock up a little bit on that this morning.
I'm not sure how much upside is left in this. That's my concern if you're coming in here and buying it now, because when the rumors started, this was at the end of December, and this stock was $14. You can see the big gap up in the chart that they were exploring a sale. Stock goes to 18. While they're exploring more, they're getting, the actual two people, or two companies that were kind of in a little bit of a bidding war here. But we went from 14 up to 24. I don't know how much premium is going to be in there. I don't think this is going to be like a $30 takeout. I think it could be like a $25 takeout. So I look at this and say, okay, well, maybe I got a buck or two upside here. But man, if for whatever reason, a deal did not materialize, this thing would be back down at 18, even $16. So, hopefully, for shareholders, it does sound like a deal is going to go through. I mean, it's trading already like a deal is imminent here. It probably is, but I don't know if risk return is there anymore to be long this thing on the potential of a deal.
Yeah, Spinner's agreeing with you here, 25, 26. I don't know why any retailer would want to be taking over any other retailer at this point, but that's not my decision. Nice run up here, but bunching up just above $24. Wynn, did we get an upgrade here in Wynn, Spencer? Wynn Resorts?
I didn't notice it, but it might have. There was a lot of ratings changes today, so I might have just glazed over it.
I don't see anything.
No? Okay, well, something happened yesterday. Major 4-day run here from 104 to 114, hit 113.85 yesterday. What a 4-day run in here. I guess you just want to see continuation this morning. Now we've backed off yesterday, so keep an eye.
Upgraded.
Yeah.
By Aegis to buy from hold.
Wow.
Price target up to 125, so it was upgraded today.
All right, thank you. 113.85. That was a high from yesterday. Maybe a little late to the game here with that upgrade. Dennis, anything more? Anything changing in balance line? S&Ps are just not moving.
Just hanging. I mean, it's just hanging. It's going to be, it's an open that's a little bit tricky. We're trying to figure out always whether risk on, risk off here. I'd say it's a little bit of a risk on open. I'm seeing the financial stronger. I'm seeing some of your defensive, names a little bit weaker here. TLT is trading down here in the pre-market. Also, the XIU is trading slightly down here, but no conviction behind anything, so it can change in a hurry. Just this morning, though, we do have the European financials, so they're strong, which usually spills over into our financials as well. And, anybody who's just joining us here this morning, and just the Deutsche Bank, just to clarify here once again that Deutsche Bank is actually trading X rates here today and is actually green here in the pre-market, so it's not trading down $1 like it would show, because the adjusted price is down, I believe, in the 16 handle here. So Deutsche Bank is actually trading up about 4 or 5% here, at least this morning. I haven't got the actual confirmation of what the adjusted close is, but it does look like Deutsche Bank could be trading up as much as 60 cents or 80 cents this morning.
Yeah, a little confusion there. All right, 8:59. Spencer's going to stay on an extra few minutes today with who's your 9 o'clock guest?
Or our 9 o'clock guest, not mine. Vlad Karpel. He's the founder of TradeSpoon. So actually, he was on the show a couple years ago. So I think 2014. He's going to tell us about his platform, what's new, and how he can help traders trade. So we'll be right back there with Vlad. All right, welcome back, traders and investors, to Benzinga's pre-market prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line with Vlad Karpel. He is the founder of TradeSpoon. Vlad, how's it going today?
It's going great. How are you?
Great. Everyone's great. Tell us about TradeSpoon and what the platform is about.
Sure. Well, again, thank you very much for having me on your show. It's been a while. In terms of TradeSpoon, we believe in statistics and we believe in analytics. That's my background. So we develop a platform for self-directed investors and independent registered advisors to help you manage your own portfolio and come up with the great trade ideas based on statistical analysis. So we have a unique forecasting tool based on neural networks that allows users to predict where the stock or ETF, currencies, futures will be in the next 5 minutes, in the next hour, in the next week, or in the next 30 days. And we're doing a pretty accurate job in terms of predicting the low, the high, and the trend. Is the stock going higher or is the stock going lower? So that's basically, we're very passionate about analytics, statistics at TradeSpoon. We believe in forecasting as opposed to traditional technical analysis where you look at the kind of rear view mirror. We believe in looking forward and looking at the different statistical software that can help you predict what the future might look like.
All right, so how exactly are you doing that then?
So we use neural networks. We use neural networks, and we basically learn on the data and train on the data to find certain patterns in the market. Every stock or every index in the market usually goes through some kind of periodic movement. Then there is external shock, like an election or FOMC meeting, and that equilibrium gets disturbed, right? But most of the time, 75% of the time, 80% of the time, if there's no external shock to the market usually finds an equilibrium and move in that equilibrium, like earnings cycle. We know that it's very hard to predict the earnings, and usually outcome of the earnings is a random event. But 2 days later, after the earnings event, and for the next 3 months, stocks behave in a certain pattern. And the software basically identifies this pattern of the movement. It learns on historical data for the past 25 years and basically makes a signal and says the stock will be higher or lower in the next day or in the next 10 days. And then it goes back and says historically when we created that signal, how many times were we accurate? And anything that's above 70% considered to be a strong signal. So if we were accurate 75% or 85% of the time, where we identify a pattern in the caterpillar, and now we see a same signal that we have seen in the past 10 times, then we assign a probability based on historically when the signal got generated, if it was accurate. And we see a lot of success in that program. We're very transparent about our results. We actually managing our portfolio real time and expose it to our users. And you can go to tradespoon.com and look at our performance, and you can see, how accurate we are in our prediction. We post every single trade, and we take pride in this transparency to our end users.
So what exactly is the platform? Is it just a web-based tool? Is it a software you have to download?
It is a web-based. Thank you for the question. It is a web-based platform. You basically go to tradespoon.com. We have a 7-day free trial, so we don't require any credit card. Everybody can join, and basically you enter a ticker. You can enter spiders. You can enter a currency pair. You can enter ETF or individual stock like Deere, and click on prediction. I'm a day trader, so I'm looking for 1 day prediction, or I look at the binary options. If I'm a long-term investor and I hold a position for 30, 60 days, then you click a button that says 30 days. And unlike any other software, we actually show a chart that not only shows you the historical data, but it extrapolates where the trend is into the future. So on a single chart, you see the historical data and you see forward-looking candlestick, which we're very proud of that unique analysis, and we actually filed for patent. So we definitely think that we are unique in the space, and you're not going to find a lot of charts out there that actually shows you where the future might trend.
So, are you overlaying your future candlesticks with the candlesticks that actually happen, like once they happen?
Exactly, right. So today is what, March 21st. So we're going to show you, 25 years worth of data in the past, and then we're going to show you 10 days into the future. So we're going to show you what we think, where the year is going to be on April 1st, April 2nd, April 3rd, all the way for the next 10 trading sessions.
And then, does that apply to all types of investment vehicles across the board? Are you just equities, or do you do ETFs? Do you do bonds, whatever?
Well, yeah, basically anything that has historical data. So for the futures, and options, since they have expiration cycle, and there's a time duration to the underlying instrument, then you can enter an option symbol or you can enter a futures. I mean, you can, but we're only giving you it's only applicable for day traders, because we only have 60 and 90 days worth of data. So for futures and options, we only show it's only applicable for 1 day prediction. But anything that has historical data, like ETF, currency pairs, forex pairs, stocks, index funds, those you can enter them and to see our prediction. It's great for 401k or any long-term investor, because you can enter your portfolio, and for each symbol in your portfolio, we'll basically tell you where we think the stock is going to be in the next day, in the next 10 days, 3 months, and 6 months. So you have a holistic view into your portfolio and tells you, if British pound is selling off, we'll show you the trend in your portfolio, and we will suggest what the entry and exit points might be, and you can make a decision for yourself. How long do you want to hold the British pound? Do you want to sell it, or kind of this quick holistic view into your entire portfolio.
So what's your background? How did you come up with this platform?
My background, I started at Options Express. So I was the first employee of Options Express. They hired me to build a trading platform. Options Express is an online broker-dealer. That was back in 1999, acquired by Charles Schwab in 2010. The company went public 2005. So that's majority of my background came because I built an online platform for traders, and that was my biggest feedback from the end users is that, well, partly it's because of broker dealers are regulated, but partly because all the analysis was done based on traditional technical analysis, based on historical data. There was no statistical software that will try to do a forward-looking analysis. And even up until this day, any broker dealers out there, they don't have anything that will show you forward-looking trend. So since I had to build a system and learn, and that was the biggest feedback complaint from the end users is that, okay, at what point do I enter the stock? What point do I exit? Is the stock heading higher? Is the stock heading lower? How do I determine that? The traditional analysis response was, well, look at the chart and see where where the stock might head, or look at the cash flow and see how much cash the company has. But that doesn't usually answer the question, do I enter the trade today or tomorrow? Because traditional analysis is very subjective, and fundamental analysis, does not does not address the timing of the management of the position. It might say that you have a lot of, the company has solid fundamentals, but it might, if it's interest rate sensitive and the interests are going up, it might sell off like a utility stock despite their cash flow and their fundamental analysis.
So okay, so let's say I sign up now for the platform. What's available to me as far as like education? Like I guess I've never used anything like this before. That any sort of predictive and analytics model or platform. So like what's available in terms of like coaching after the fact?
Sure. So I actually come from the family of teachers, and I'm very passionate about education. So we provide completely free education. We have webinars and workshops. So today, actually at 3:30, we have a workshop where we talk about option trading. What are the key attributes to look when you trade stock and options? And this is completely free event. It takes place today at 3:30 Central. So you can go to tradespoon.com, click on register for workshop, and we actually have continuing educational series every Tuesday at 3:30 Central, 4:30 Eastern. You can sign up for this workshop. It's 1 hour long workshop. Then we have archives. We have 2-minute videos that talks about stock trading, option trading, and how to use our tools to help you to do stock option trading. And we have every day we either provide market commentary that we, as part of our market commentary and analysis, we actually analyze in treasuries, we analyze in stock market, we analyze commodities, and we put our charts, the forward-looking charts, inside of these commentaries. So we issue these commentary twice a week, and then we issue short videos twice a week. All of that content is free, and they're either short 2 to 5 minute videos or they're long educational workshops. And we're very passionate about education. And if you go to tradespoon.com, there is a lot of archives that you can look that can help you use the software in a short period of time.
All right, we've been on the line with Vlad Karpel. He's the founder of TradeSpoon. You can find all that and more on his site, tradespoon.com. Vlad, thanks so much for joining us today. Have a good rest of your day.
Thank you, Spence. Thanks, guys. Take care.
All right, hope you enjoyed the show, everyone, today. Hope you enjoyed our chats with Vlad, Nick, and Gary. That's it for us. Have a good rest of your trading day. We'll be back with you folks on Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.